All right, let's dive right into this explainer. Today, we're unpacking the fascinating and honestly kind of hidden financial plumbing behind the highly anticipated SpaceX IPO. If you follow the markets, you know there is a massive amount of buzz about this colossal private entity finally going public. But today, we're skipping the basic headlines. Instead, we're going behind the scenes to break down exactly what happens in these massive liquidity events step by step so we can truly understand the hidden mechanisms at play.
So we have to start with this startling premise from our source material that really challenges the whole idea of choice in everyday investing. Is your pension fund actually being forced to buy? When we think about investing our hard-earned retirement money, we usually imagine it as this superconscious, deliberate decision. You do the research, you weigh the risks, and you allocate your capital. But for a ton of retail investors, that choice might be completely overridden by automated, invisible system mechanics that are just operating entirely in the background.
To understand how this all works, we really need to look objectively at what's known as the SpaceX IPO trap. This is basically a scenario where passive retirement funds are mathematically compelled to purchase a stock at its peak hype. And I want you to really notice that phrasing, mathematically compelled. We aren't talking about a savvy fund manager actively deciding it's a good day to buy. It's a rigid, hard-coded formula dictating market behavior without any human intervention whatsoever. And it is absolutely crucial to understand exactly how this formula intersects with your own retirement savings.
Section 1. The Fast Entry Loophole. Speeding to the NASDAQ 100.
Just think about the sheer speed of this corporate maneuver. Day 1 marks the IPO launch, the moment the public can finally buy in. By day 15, the rigorous fast entry criteria are successfully achieved, and literally the very next day, on day 16, it is officially part of the NASDAQ 100 index. The velocity here is just astonishing. They are compressing what is normally a heavily scrutinized, slow-moving process that can take months, sometimes years, into just over 2 weeks.
Section 2. Forcing pensions to buy. The chain reaction.
Now, what's really interesting is how that 15-day sprint triggers a total financial avalanche. It's essentially a 3-step algorithmic process. First, the stock achieves fast entry. Second, because of that rapid entry, boom, it's automatically added to the NASDAQ 100. And third, index and pension funds automatically purchase the shares. Because these massive passive funds are strictly mandated by their prospectuses to track the index exactly, the very second a new stock is added, their computer algorithms must execute buy orders. They simply have no choice. The system just forces the purchase to maintain perfect alignment with the index's new composition.
So here is the crucial takeaway. This mechanism effectively locks in passive investors right when the hype, and potentially the price, is at its absolute peak. This fast entry loophole ensures the stock is shoved into millions of passive portfolios right on the heels of that massive initial public attention and media frenzy. If you hold a passive index fund in your retirement account, you're inherently participating in this peak hype purchase, purely as a byproduct of strict index replication rules. You're swept up in the wave whether you actually wanted to ride it or not.
Section 3. The 10-to-1 voting math. The dual-class structure.
10 to 1. This is a staggering ratio, and it represents Elon Musk's super voting power. It means we're dealing with what's called a dual-class share structure. The fundamental reality here is that not all shares are created equal when it comes to having a voice in the company's future. It's not just about owning a financial piece of the pie, it's about the corporate governance rights, or total lack thereof, attached to that piece.
When we compare these two classes of stock, the vast disparity in corporate influence is immediately clear. You have your standard retail investor share, which grants exactly 1 vote per share, and this is exactly what those passive index funds are buying up. Contrast that with the founder share, which grants 10 votes per share. So even if passive retirement funds accumulate a massive mountain of retail shares through this forced algorithmic buying, their collective voting weight is permanently diluted by a factor of 10 compared to the founder's holdings. It establishes this impenetrable ceiling on retail influence.
Section 4. The Illusion of Control. Voting Reality.
Because of that 10-to-1 math, the vast majority of control is structurally locked away from the everyday retail investor. Founder control utterly dominates the space at roughly 91%, leaving retail voting power with just a tiny 9% sliver. And this isn't some accident, it is the exact mathematical outcome of this specific corporate governance structure. The power dynamic is just permanently fixed in this orientation from day one. Which really makes you ask, what does it actually mean to be an owner of a public company if your ownership mechanically cannot translate into proportional influence?
Well, the source material leaves us with this stark, objective conclusion regarding the reality of a retail investor's voting power. It is mathematically guaranteed to be irrelevant. Just let the heavy weight of those words sink in for a second. It isn't just highly unlikely that retail investors could ever sway a shareholder vote. The system is precisely engineered so that they fundamentally cannot. Their input is entirely neutralized by the sheer arithmetic of the dual-class system. It completely rewrites the traditional relationship between a shareholder and a boardroom.
So, I want to leave you with this final thought. It really makes us wonder about the true nature of democratization in modern investing. If your pension is systematically forced to buy and your resulting vote is mathematically guaranteed to be irrelevant, who really controls your financial future? It definitely encourages you to look a little deeper into the index funds holding your own retirement. Keep learning, keep questioning the mechanics, and thank you so much for joining me for this explainer.